Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 18th of April, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. I'm going to go for our usual regular run through in here, calendar, what we've had, what we've got coming up. Take a look at both the macro and earnings calendar. Remember, we're just getting into the start of the US earnings season, global earnings season. We'll also take a look at all the headlines from the major news wires to see what's going on the macroeconomic front, the earnings front, on the central bank side, geopolitical side. And then we'll take a look at the market, see what's going on with the actual markets, the markets you guys are trading. So first of all, let's kick off with the calendar. Yesterday was fairly light. On the US side, we did get Mester speaking. I'll come to Mester a little bit later. If we go into today, on the European side, it's been fairly light in here as well today. Not much really of any great significance. Going in today, although there looks like there's quite a lot in here from the US, there's not actually a huge amount that super interests us on the data side. What we do see, though, remember, I closed the tab, but we've been looking at it's the Fed meeting in a week and a half. Okay, Fed meeting in a week and a half, and so the Fed will go on their blackout period where they don't talk about monetary policy from this Saturday. So today, tomorrow, the last 2 days. So we have a kind of a lot of Fed speakers over the last week since the CPI data last week. All of them obviously pulling back on their kind of outlooks and views on what potentially rate cuts we could see. And Powell certainly said that earlier this week. We have a host of Fed speakers coming up. Bowman in here, then Williams, and then Bostic, and then Bostic again in here. So we have significant Fed speakers throughout the day. So we're certainly keeping an eye on those Fed speakers as we go through the day. So check the calendar in here, Fed speakers throughout the day today. That's the main focus. Nothing really significant here on the data side. If we switch to the earnings calendar in here now, you'll see we have had a few Blackstone in here out already today, but really the key focus on the earning side is going to be Netflix, which we get after the bell today. So after the close, some point usually within the hour or so after the close, Netflix reporting in here, and that's going to be critical. Remember, Netflix not only important because it's one of those magnificent seven, one of those FANG stocks, so large cap stock anyway, but also because it is a significant barometer, a reflection. It echoes not only the US consumer but the global consumer. So not only looking at the revenue and earnings per share numbers in here, we'll be looking at the number of memberships taken out and any kind of forward guidance coming from Netflix regarding how that might impact the global consumer. So let's take a look at what we've seen on the overnights. Well, Bowman we've already spoken about. We've got some other Fed Mester we already spoke about. Bowman, inflation progress slows and possibly halts. So we've had kind of continuing to see Fed speakers rein back on what they've previously said in here. This is interesting. I'll pop this article out. We'll come to it in a second. Traders pile into contrarian bets that Fed will front run cuts. What does that mean? Well, there's basically on the interest rate markets, we're seeing recently a lot of bets of basically saying that we're looking for more rate cuts versus the end of this year versus the end of 2025. So basically, the Fed will front run. So they put more aggressive rate cuts now rather than later. So that's interesting as well. See how that pans out as well. So that's what's coming through from the actual markets. 5 things to start your day from Bloomberg in here. What have we got? Well, futures have rebounded a little bit overnight. We've seen slight better activity on the futures markets, having suffered significant losses so far over this week, mainly driven by the some tech rebounding and global chip stocks. So poster chart Nvidia fell into a technical correction. So that's obviously a negative in here. But some of the chip stocks have rebounded here on the back of Taiwan's TSMC, who are the chip maker for Nvidia and Apple. Their sales guidance better than expected. So that was a positive. Mester, as we said in here, that rates could be held steady. No need to cut rates. And Bowman added that progress inflation may have stalled and questioned how much tighter monetary policy is restraining the economy. So in here, further Fed speakers in here reiterating what Powell has indicated already this week in here. Dollar defenses, we don't really need to worry about that. And what we've got coming up, we've already run through that. Primarily all of these Fed speakers that we've got coming up in here today. Here's the article on TSMC, better than expected outlook. AI continues to fuel demand. Mesta, Fed can hold rates steady. No, not in a rush to cut rates. And again, the same thing regarding Mesta. Coming through here from Reuters. The other one was from Bloomberg. On the overnight, so a slight rebound in futures as bonds rebounded to lower yields in here, and after having had declines since last Friday, and again recoiling oil. And dollar so calm as tech earnings loom. So yeah, we're going to go into that. Obviously, more significant earnings going into next week and beyond. And again, in here from futures rise as chip stocks bounce. So chip stocks helping the market back higher. Just on the other central banks in here, though, we have seen continuing guidance coming from the ECB that interest rates could be cut in June. So it looks like we're going to get the ECB actually cutting rates before the Fed. It looks like that's pretty much nailed on there, which is something I didn't think I'd hear myself saying only a couple of months ago, or even only a couple of weeks ago. So just looking at a quick look at the Fed Watch tool, we've been watching this, no real massive changes in here. June and July now really off the cards, no chance in June, really now potentially not. The chance that we don't get the rate cut still is like 50-50 whether we get one in July in here. So we're not expecting anything in May and June clearly, and now July at the earliest, kind of 50-50. And now, as I said previously, if we go to the end of the year, the market's now only pricing in potentially 2 rate cuts before the end of the year. Only about a 20% chance we get more than 2 rate cuts. So maybe the Fed ends up delivering more than the market's now expecting. And here's that bet, those bets in here that are going into the market. Traders pile into contrarian bet the Fed will front run cuts. Open interest surveys after record volumes trading the SOFR spread in here. Wages goes against consensus call for higher for longer rates. So this is kind of a consensus. This is a contrarian bet against the consensus that the Fed will cut quicker, sooner, and then not cut as much going into 2025. At the moment, the market's pricing in more cuts now. The cuts have been pushed back into 2025, obviously. Quick look on here on the overnights in here. So Asia slightly higher, 0.3 up on the Nikkei, 0.8 up on the Hong Kong Hang Seng Index. European exchanges slightly better, but only slightly in here. The FTSE and DAX little change, slightly better this morning. The UK and German indices. The French CAC up just under 0.5%. And on the overnights in the US in here, Dow, S&P, and Nasdaq between 0.2 and 0.3 higher, getting that rebound bid coming in here from the tech stocks, and also because we're getting this little bit of a rebound. We saw a rebound yesterday in bonds. So remember, bonds higher in price, lower in yields. So some of that higher yield pressures, higher yields equals higher interest rates that we've seen coming through in here over the past, certainly the acceleration from last week, lower in price, higher in yields, which have been negative for stocks in here. Some of that easing with the rebound we've seen in the bond markets over the past 24 hours, and now also in the global tech, global semiconductor chip stocks in here, helping tech to have a slight rebound in here. But we'll have to see how that plays out. And you can see that in here on the yield side. So it's just the upside down reverse of that bond chart in here. Here's the 10-year bond chart. So we've seen the market, obviously, in here accelerating to lower prices, but then we've just seen this rebound to higher prices. And then on the yield, it's the inverse of that. So you see we've seen this acceleration to higher yields, and yesterday a reversal back down to lower yields. So that's helping indices higher. We remain negative in here, despite it was a fairly negative close in here yesterday on the S&P and Nasdaq. However, again, watching for a potential rebound. We pointed out the potential for a rebound yesterday. It didn't come, but I'd like to point out these potentials. I think there's more of a risk today. Okay, maybe I was a day early on this. And we did say it wouldn't be signaled until we actually cleared above the peaks in here, and we didn't clear above those peaks. You got back up towards here and then fouled back down. This was just around the cash market open yesterday. We highlighted these levels here. We highlighted, I think it was 51.23 to 25. We fouled from below that and stayed below. I think the spike there and then ultimately all the way up here. But I mean, that spike there is going to be important today. 50.97. If we can clear above there, the market may have a chance to actually turn around in here. But at the moment, staying bearish. Similarly, on the Nasdaq in here, we've got that overnight spike. Now, clearly, it's all the way up here is important, 17,990, 18,000 kind of area. And we failed ahead of there again yesterday on the cash market open. We flagged that yesterday. But now we've got this little spike peak from yesterday in here, late yesterday's session, 17,796. So we'll say 17. Is that right? Let me just double check that. No, that's wrong, I think. Yeah, back through 17,800, up through 800 in here would see a mini base and then aim us up towards, I think, this area here, up towards 18,000. So 17,800 is kind of my line in the sand, but staying bearish whilst we were below there. But if we can get above there, we could see a little bases going in. A glimmer of hopes in here from both the bond market and from the semiconductor chip sector. Could see we get a bit of a bounce. However, remember, after the bell, we do have the important Netflix, and we'll see how we get along with that. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care. Stay safe. I'll be back tomorrow with the TGI Friday end of week webinar.